In this video, we're going to be going over the scariest part about trading that causes so many people to blow their accounts time and time again. I think this video is going to open a lot of people's eyes. So what makes trading so difficult is the fact that oftentimes you don't know that you're doing something wrong until it's already too late. If you are programming something, like let's say you're building an app or you're programming a little simulation or whatever it is, if you screw up, you know basically right away because the program just won't run because there's an error. If you're building something small like a desk or a chair or something little like that, oftentimes you know you screw up right when it happens because the desk just, it's not right. But with trading, it's different. You can be doing the wrong thing. You can be doing a horrible strategy and make money, and you don't even realize that what you're doing is wrong. And a lot of times, you can be doing something right. You can be making smart and strategic decisions and still lose money. And basically, this video, we're going to be talking about all that type of stuff because this part of trading is single-handedly what causes so many people to just blow their accounts. So if we can see on the screen right now, I have another simulation. Basically, this is a winning strategy. Basically, the account starts at $5,000. The trader in this example wins 68% of the time. The trader loses 32% of the time. When the trader wins, the account increases by 10%. When the trader loses, the account decreases by 10%. This is a winning strategy over the long term. Now here's the thing though. We can see that in the short term, it's not all sunshine and rainbows. We can see right when the account started off, it went from 5,000 up to 7,000 over the course of a couple months. And that's awesome. But check this out. The account went from $7,321 all the way down to $3,363 over the course of a couple months. Even though this is a winning strategy that works over the long term, this account still had a significant drawdown. And this is the same for all types of traders, whether you trade stocks, options, futures, forex, cryptocurrencies, or anything like that. Even this highly profitable strategy over the long term had a significant dip in the short term. And the scary part is that a lot of traders, especially a lot of retail traders, would say, wow, I've been constantly losing and decreasing my account for a couple months now or a couple weeks now. This must mean that my strategy doesn't work. And you need a lot of test data in order to test that theory. You can't just say, okay, I had a red month, that means my strategy doesn't work. You need a lot more data to prove if that strategy works or it doesn't work. But the main point was to show that this trader is doing something right and he's losing money in the short term. So as long as he stays the course, he stays disciplined and continues to follow his strategy, he will recover those losses. And then sometimes we have traders that do something that is completely wrong. They make money in the short term and they think they're doing something right, which just leads to destruction down the road. So a lot of times I have people asking me about, short-term trades. And this is mainly newer people, but even some experienced people, I guess you can say, struggle with this part of trading too. Let's say we look at BBIG. This stock ran up back in September of 2021. I'd have people ask me hey Mike, BBIG just went from $2 all the way up to $9.50. They'd be like, hey Mike, is now a good time to buy it? And I would say, no, it's not worth the risk right now. And then of course the next day BBIG goes up, a little bit more. And then those same traders oh, I knew I should have bought BBIG. I'm so glad I bought BBIG calls or whatever the case may be. And they'll bust my balls a little bit. And what concerns me is not the fact that they're busting my balls. It's more so the fact that they made a bad decision that had a good short-term outcome, and they think that that is a smart thing to do. You cannot confuse short-term profitability with whether or not you are making a good decision. We can go to a bunch of stocks and a bunch of examples, especially over this past week with Tesla, for example. Tesla went from $750 all the way up to over $1,000. And I know I had a lot of people asking about the 1100 strike calls that actually expired yesterday. And they would talk about them and, I've been saying Tesla is not worth the risk for short-term out-of-the-money calls, and then I know I had people saying, "Oh, I knew I should have bought short-term Tesla out-of-the-money calls or the 1100 strike calls." And like I said, what concerns me is not the fact of the ball busting, we can say. It's more so the mistakes made by retail traders, often new traders, with short-term profitability. Like, if we look at an even better example, let's say we go to Berkshire Hathaway, Warren Buffett's fund. We go to, let's say, the past 3 years. If we zoom in before the COVID crash, Berkshire had highs of like $231 back in like January of 2020. They did not recover from those highs until around like mid-November of 2020. But check this out. At the same time, the S&P 500 not only recovered from its all-time high before the COVID crash, but it actually broke it on like in August 2020. So do you think Warren Buffett was sitting there, in August or September or November of 2020 saying, "Dang, I must be doing something wrong because the S&P 500 is outperforming my portfolio"? No, he's thinking about it over the long term, and look what ended up happening. Right now, Berkshire Hathaway is significantly outperforming the S&P 500. So if we go to like Berkshire Hathaway's performance since the start of 2022, we could see Berkshire's up around 19%, while the S&P 500 is down around, around 5% or so. So it's like you have to be thinking about everything in terms of the long term, right? And that does not mean you have to just do every single investment you make as a long-term investment. But like, even if you're day trading, like let's say you're day trading Bitcoin futures, for example, you can be trading this stock for a total of 5 minutes, but you still have to be thinking about everything over the long term. Like, are the moves I'm making right now, is this a good decision that will make me profitable over the long term? And if you don't know, you have to test that. If you do know, then just stay the course, and you might lose 10 trades in a row in the short term, which would be very unlikely, but it's still possible. So when those bad times happen, as long as you have a proven, tested strategy, it will return, and everything will be all good. So please keep that in mind. But yeah, I mean, just the main point of this video was to shed some light on the fact that short-term portfolio performance has no correlation with if your strategy is profitable or not. Anything can happen in the short term, but you have to think about everything over the long term. Like I said, even in this example, there was a point where the account lost a significant portion of its value, but as long as the trader stayed disciplined, it would have been all fine and all good in the long term. So I hope you guys learned something from this video. I feel like these simulation videos provide a lot of value. I know I made another one I think last Saturday, and a lot of people loved it. So I hope you guys really like these videos. If it helps you, please leave a comment down below. It takes like 2 seconds, and I would greatly appreciate it. The comments help so much, like a lot more than you guys even know. So if you learned something, please leave a comment down below. If you are new here, please consider subscribing. I'll have a link in the comments down below for the free StockedUp Discord chat, so feel free to join. Besides that, thank you guys so much for watching.